I wanted to share what I'm looking at in this market and the reason behind it. So the first one I already shared, PSU Banks. The deposit growth is far better than private banks. Then there is metals. China is the biggest consumer of metals. If China does well, their infrastructure, their housing market does well, the metal industries globally will do well. Dollar index and metal companies have like inverse relation, and that I've shared that video as well. Now there's a next theme that I really like, which is OMCs. When I shared OMCs, it was very cheap. I think around 2 or 3 months ago, somewhere around June, they were very cheap and they went up 20-30% from there. And then it crashed from there because of oil prices. They had a huge hit in their inventories. Now they're back to the same levels that we saw in June. OMCs in general, like they're generating massive profits. They're very cheap. So it's not just one segment that will do well, which is EVs. Now we're also going to see a broader bull market. OMCs have fallen short in this bull market. The stocks have not ran up in the last 2 or 3 years, like maybe 100% somewhere from there, but not a lot. And compared to the bull market that we have, it hasn't risen that much. Fourth one, which is power financing companies. Now, broader, if you look at overall power industry like solar, it is very well priced in at this price. One sector that is underpriced right now, it is like the financing side of power companies. 2 or 3 listed companies, I'm not going to name them, but I give you a broader idea. That sector is going to do well despite any sort of downsides, down movements in the solar companies, the power companies. And like I'm very eternal bull on this sector, which is IT. I'll give you a few scenarios. Let's say the market crashes, right? Market crashes, US elections, we see results of US election, the dollar goes up for a while. What happens when the dollar goes up? Rupee crashes. What's the direct beneficiary of that? IT. Now, in another case, let's say IT companies, I don't know, they have some sort of dip because of problem like overvaluations in the US. I don't think the spending in the AI services will stop if there's a downturn in like the tech stocks. Indian IT companies are not direct product companies. They are kind of accountability partners. When I say accountability partners, it's kind of think of it like a gym coach. Everyone wants to get fit, everyone wants to get competitive. So they have fitness coaches. So that the end goal, like getting fit, doesn't end. And the same is going to happen with IT companies. Their clients, they need to implement all these AI infrastructure, AI services in their systems. It's not that they can think of it, they can look at their competitors, are they doing it? Is this guy doing it? Is this company doing it? Should we spend 5 billion in it? Because I don't know if it's going to have a direct impact on my top line. That's not the question. They have to do it to survive. Whether or not the impact occurs, that's a different question. But to play that odd, like if I spend this much, I'm going to be safe at least for the next 5 years. If I come across a problem that's going to happen in the IT service. Nandan Nilekani explained this on like a podcast of, I listened to that and it made a lot of sense. He said that IT guys, they don't want to like take a chance of missing out on AI growth. Whether or not it impacts their bottom line, top line, they would want to invest in it because the risk of not doing it is higher than the risk of them losing 5-10 billion in the next 1 or 2 years.